Welcome back to Total Money Management. As always, I'm back with Steve. How you doing?
Good, mate. It's a bit hot in here still.
Well, you keep putting the aircon on 95,000 degrees.
I'm getting old, mate. Menopause.
I'm getting old menopause. Well, we've just lost the three female listeners that we have.
That's it. All over.
They've gone.
Right. Protests on the socials.
Yeah. All right. Well, this week we're covering March 3 to 7, 2025, and the big issue is Donald Trump.
Total Trump management.
Oh.
Look at that. Beautiful. Yeah, but in all seriousness, Donald Trump's a nightmare. Okay, thanks. See you next week. But he and Musk are really starting to kick in. And it was funny, because the other day someone said it's been 6 weeks, and it's like, holy Jesus, it has too.
It feels like it's been 6 months.
In 6 weeks, there's been so much chaos and trouble. Yeah. I mean, he's blasted everybody.
Are we going to war? Are we not going to war?
Oh, well, Australia copped 25% tariffs today.
On steel.
This is March the 12th. Mm-hmm. So we copping it. Canada's copping it. Mexico's copping it. Europe's copping it. It's just blind gunshots everywhere.
Well, you got all the leaders of the free world all going, what's happening? Trump, we thought we were mates.
Night, very nice weather, and we go, right, 50% tariff on those bastards.
Oh.
It's just crazy. It really is. I mean, honestly, in the geopolitics of what's going on in America is absolutely insane. And seriously, I've never seen anything like this bloke. It is, and Elon Musk as well.
Well, even in Trump 1, he wasn't anywhere near like this.
Yeah, but people, I think, and I wrote about this a while ago. I think people underestimated the damage that and the amount of determinism that Donald Trump has to change things. Mm. Right? I mean, I think a lot of a lot of business people were going, he's not going to do all those tariffs.
Oh, he's a capitalist.
Well, hello.
Yeah.
Right? And now, now the market's falling, and they're now saying Donald's a bit like, I don't care about the stock market.
Well, it's almost like he's wanting to put it in. Well, put the economy into a recession, and it's dragging the stock market down with it. And people are now going, "Oh, is he doing it on purpose to ride it back up?"
Well, you see, there's a form of this came out. A lady called Naomi Klein wrote a book 15 years ago, I think, called "Crisis Capitalism." Or disaster capitalism. But essentially what she was saying was when a lot of these countries, smaller countries, have a disaster, like a natural disaster, the Americans would go in and basically clean the joint out, right, and rearrange things for their benefit. So the argument was, the old saying is never waste a good crisis, right, in politics, right? If you have a crisis, right, now's your opportunity.
Yeah.
And that's, I'm not saying they are, but
he's creating the damn crisis.
A little bit like, Trump is creating a crisis enough to break it down to then say, now we'll build it back the way I want to do it with total authority. Mm-hmm. So today yesterday they sacked all the staff from the Department of Education. So there's no more Department of Education, right? RFK has come out and said, there's some problems with the measles vaccine, right? Like, these people are seriously fucking loose cannons, right? They really are. And so this is what these things are going to create unbelievable chaos. I think we said in the last podcast or the one before, they sacked the guys that looked after the nuclear weapons.
Yeah, it was the one before.
And then they had to write to him and go, we made a mistake, can you come back? Yeah. I mean, that just says, Elon Musk's bloody, fanboys getting all this government data and putting it on, bloody Reddit because they think, classified data, right? That's what I mean.
The Truth Social thing, whatever they're using.
Mate. I mean, honestly, the stuff he's doing is just unbelievable.
Well,
and businesses hate that. There is nothing worse than getting a leader who is a sort of dictator or authoritarian, and you don't know how your business is going to go because he might wake up in a bad mood or someone offends him, right? That's what I mean. That's where you look at it and you go, man, we're not going there, or we're not building anything until we get some assurances.
Well, the volatility is killing people. I mean, even in the stock market, it's
absolutely. So this is why I think we're in for we might have an interesting year this year.
Yeah. Well, I mean, if you look at the last few stock market crashes, you can kind of look back in hindsight and go, oh, that's probably one of the... Obviously, the cape's pretty high at all of them, but you can say, oh, that's probably the catalyst.
Yeah.
Afterwards.
Yeah.
Whereas now, it's like, no, this is the catalyst. Yeah. This is the reason for it.
I think with the cape at 38, investor sentiment is through the roof. Investor ownership is through the roof. Like we said last week, everything's screaming over valuation. Donald Trump can be the catalyst that drives that thing south, right? And, he will sit there and torch the joint.
He'll torch a joint and then build it back up and tell everyone how great he is.
Yeah.
That's just...
look, as I say, I don't know. It's just completely indiscriminate, right? The uncertainty is enormous.
Nobody's safe.
Right. I think I wrote in the week that was coming up... when in the masterclass that we had, I said, the problem is everybody's got an opinion on Donald Trump about what he wants, right? Like, oh, Trump wants X. No, Trump wants Y. And I'm saying, yeah, we've got an opinion too. Might as well throw it in the ring because everybody else is having a shot at it, But generally, the broad thesis is he wants countries to stop taking the you-know-what out of America, right? Because countries have been doing that economically for about 20 to 25 years. And so the argument was in 1980-odd, right? They all went, we'll have free trade. And they all went, yeah, and we're going to open up, we're going to have lots of money running around and, freedom and blah, blah, blah. No, everybody in the world went, yeah. And then the Europeans went, yeah, we're just going to bullshit this bit, right? And then China joined the WTO and went, yeah, we'll open up our markets. Yeah, get stuff. No, we're not. So America has been hard done by, and Trump is right in that respect, right? I actually agree with him. And a lot of the problems of Europe have been caused by the Europeans. Right? They've been sitting there doing nothing for 20 years, just sponging off America.
Yeah.
Well, hello, that's over. So,
well, let's talk about European defence stocks.
Yeah.
They haven't spent anything on defence for how long?
Yep.
60 years or something.
Yeah.
And now they could be a decent place to look at.
Absolutely. Well, their stocks are going gangbusters. We talked about defensive stocks about, I think, 12 months ago.
Yeah.
And they've gone really well. And there's probably still a lot more room to move because the Europeans have finally gone, we better start doing something. Yeah. So the Germans have now got a $500 billion budget for Europe to do weapons. They're going to do them in-house. So in other words, they're saying to the Americans, get stuff, we're not buying your stuff, we're going to build them ourselves. Germany and France and Sweden and Finland and those places, they've actually got some super technology, military technology, right? All it is a matter of scaling it up. Yeah. Now, that's not just like, oh, look, we'll just double the factory tomorrow. This is pretty sensitive stuff. Computer chips and all that sort of stuff. But Europe can do it. Like, it has the capability.
Yeah, well, Europe's been through more wars than...
Absolutely. And the UK, right? Yeah. So... From that point of view, Donald Trump's going to have to be a little bit careful because the Americans have always been the military leaders.
Yeah, the protectors.
Yeah. So, you're always your own worst enemy, right? So if Trump goes too hard, then he finds, he actually gets isolated and Europeans start going, we should be talking to China. Because Donald Trump's a nutcase.
Yeah, we've been lazy. We're not lazy anymore.
Let's go and see if we can talk to China, right? And then Xi's sitting over there going, sure, come and talk to me, right? So they've got to be really, really careful.
Yeah.
This is why it's really interesting times, right? And the reason why I put this one up, For those who are driving and not watching YouTube, foreigners bought $76.5 billion worth of US stock. So again, the fastest 3-month pace in history. What I'm saying is everybody's in the tank in the US market.
And
right?
by foreigners, that's just foreign citizens, not countries.
Well, countries, right?
Right,
Sovereign
okay.
wealth funds,
Yeah.
right? Life insurance companies in Europe, all that sort of stuff. And the issue I'm pointing out there is, again, that the US is about 75% of global GDP market cap. Now, their economy's 25%. So what I'm saying is everybody's in the buying US market and they're buying FANG stocks and, so if that reverses, it could be catastrophic in terms of all the foreigners saying, right, we're out of the US market.
Like that monopoly effect will just be magnified.
Yeah, absolutely.
Yeah.
Absolutely.
And you've said here, like they've historically had poor timing and they've got in right before some crashes like in 2008.
Yep.
So a bit of an indicator as well.
Yep.
Tuesday, Global Economic Policy Uncertainty Index. So people are just uncertain. Volatility's everywhere.
Yeah. As I say, we're going to be talking about this for a little while, but it's just you're just going to have to be prudent and be patient, right? There's yourself. Crypto fell 5% when the markets are falling.
Yeah.
Like people are saying, oh well, crypto's a hedge to the markets. It's like not at the moment. Gold, right? Gold, it's all right. Buy lots of gold. It's like it's falling too. Like this is where you get, as we teach folks, when shit hits the fan. Everything gets sold down, right? Doesn't matter what it is. Just give me cash.
Well, exactly. Particularly when most things are overvalued as well, like crypto.
Absolutely.
It's all hedged to the S&P and the US index.
And again, it's just this, margin lending, and everybody's borrowing, and everybody's in the market, and we're all in Nvidia or Facebook or Tesla, and we're all justifying absolutely stupid valuations. Yeah. And what we're saying is, listen. That goes on for a period and then it stops, right? And your job is to find out when it stops, right?
Yeah, don't be lazy when it's time to get in. That's the...
Yeah.
Kind of the moral. All right. On Wednesday, we're getting through this. Economic growth continues to bump along across the bottom. So this is Australia. We haven't had economic growth for a while.
Yes.
It continues to not happen.
See that tiny squiggly little thing there? See that thing there? That's the latest, right?
Oh, my God.
So that's why I'm saying when people talk about, we've got full employment and all this sort of thing, wages are terrible. They should be booming if we got full employment. Inflation should be high, but it's not that high.
We got to start spending and making things here again.
We've got to raise wages so people have got enough money to buy stuff. At the moment, what we've been doing... Not property, right? Because that's everybody who's looking at their finances is going, man, we're not going to make it. What do? The bank will give us some money, right? So that's what people do, right? Because, if you've got a decent wage, you don't feel like you're on the edge. Right? If you paid a decent wage and things are pretty stable, you're thinking, okay, well, this is all right. Right? You don't go, I'm going to hit the casino. Right? Desperate people do that. And the reason why is because they're bloody desperate.
Yeah.
Right? Well, in Australia, the desperate pastime has been buying property.
Yeah, true.
Right? And that's why I'm saying, all of this stuff about full employment and it's all great. It's like, dude, we've got economic growth of 1%. That's miserable.
But if we started, let's just talk about Biden's administration, where he was trying to bring a lot of things back into America.
Yeah.
If we started doing something like that...
Yeah, it would be better, but the argument is, can Australia... we cannot have a car industry again, right? It's just simply, we're too small. It's about 1 million... Maybe 1.1 million cars sold in Australia.
It's too far away for export.
It's too far away. So, we can't do that. But we have to also think about, we can still send iron ore and coal off. The question is, Australia should look more at stuff like import replacements, right? So The other thing too we should mention is that in a globalised world, exports are everything, right? Everyone just talks about exports, exports, exports. Well, Australia's about 80% internal. So 80% of GDP is, going to Woolies and buying baked beans and all that sort of stuff, right? So, and it's the same with America. America's economy is enormous, but it's also internally enormous. I think last time I read it was like 12%
Right. Okay.
of GDP was exports, which is tiny. Germany's 50,
Yeah.
right? China's enormous, right? But so those countries are the ones in trouble with Donald Trump because China can produce so many cars. If Trump says we don't want them, which they've already said, but if Europe says we don't want them, then China goes, man, what are we going to do with all these people? Because there's no point having 50 million capacity for 50 million cars if the world says, well, we don't want them.
Mm.
Right? Well, what do you do with all the workers? Well, you've got to sack them.
Yeah.
Right? Or you've got to give them, like they did in Japan, give them crap jobs, but he will stand and, cleaning streets and all that stuff.
Yeah.
When people go to Japan, they go, oh, the place is so clean. It's like, yeah, because they've got an unemployed army walking the streets, tidy and stuff and, all that stuff. It's all underemployment.
Yeah, just to keep them afloat. There's a riot, basically.
They don't get great wages. They're sort of subsistence living. They're subsidised a lot by the government.
I mean, I feel like Australia's hamstrung. What can we actually do to increase?
Spend money,
Yeah.
right? This is what I say, the government deficits, right? This is where government says we're going to start building stuff. We're going to incentivise the private sector to build stuff. The problem is we don't build stuff anymore. We just dig up bloody coal and chop down trees.
And we'll not even build houses.
And
just sell
iron
each
ore and
other's
stuff.
houses.
And we're not even building that many bloody houses.
Yeah.
But that's what I mean. It's a real problem. And they say Australia's productivity is really awful. Yeah, because you can't force... The only way to force a business to get its productivity up is to say, righto, you've got to pay your staff more. And then the business says, okay, I've got to do some automation or, I've got to increase my productivity. Right? But if you don't need to, because wages are falling, like we talked about last week with the profit share, well, what do I care? I'm not paying Jacob anymore. You know.
So businesses are getting a little bit, they're cruising along, right?
Absolutely. They have been for years. That's why the rich are getting richer, right? Because the businesses are not being forced to compete. And they're not being forced to pay the wages. Wages have gone up since COVID, but we're talking about being underpaid for the last 25 to 30 years. You can see it in all the charts.
Yeah.
And it's not just Australia; it's in America. The reason why they voted for Donald Trump was because they're so bloody goddamn poor.
Yeah. Well, they wanted a change. They wanted to change it. Yeah.
The Democrats were, the Democrats was the people of the working class, and all they want to talk about is identity politics.
Yeah.
So the poor people went, you know what? We might as well vote for Donald Trump.
Yeah.
And the Democrats weren't even smart enough to figure that out when they voted for him the first time, right, with Hillary Clinton.
Yeah.
They went and bagged him again. It's like, oh, my God, Biden actually did really well. But then then they went and punished Joe Biden for inflation.
Yeah.
And it's like, dude, you got
old.
a job, wages are booming, the economy's going at 6%, but they wanted to punish Biden because Doritos had gone from $4 to $5.50. It's like, oh man,
Oh, all right. So on Thursday, we've got more about Trump. He could announce a pathway for tariff relief on Mexican and Canadian goods. But he's chucking tariffs around everywhere.
Yes, this is out of date.
Yeah.
Today was the governor of Ontario in Canada, right, provides electricity across the border to about 1.5 million Americans, right? So the Canadian province, run by the former Prime Minister Doug Ford, said, all right, well, we're going to put a 25% tariff on electricity. Right, so all you suckers across the border there, you can start paying more for electricity. They took all the US booze off the shelves. Right, so I think it was Jack Daniels. Jack Daniels said, "What the hell?" Right, so this is what happens. Right, war. You get a trade war. So now the latest is the Canadians said, "Well, we won't put the tariffs on because the Americans have agreed to talk."
Right.
right? So that's
bluffing each other.
yeah, but this is what I mean. Now, Donald Trump can shout all he likes, but if the people on the ground going, Donald, my electricity's just gone through the roof because you're shooting off your gob, you get some interesting politics, right?
Well, what's all this bloody 51st state nonsense that...
It's just Trump with his bloody garbage. There's an old plan. There's an old plan called the Monroe Plan. Monroe Plan, I think it was, about the Western Hemisphere. So it was sort of Canada, America, Mexico, South America, right? And Trump wants to own all that, and Greenland. This is the argument with Greenland, right? But
I think it was Fox or someone sent a presenter over to Greenland and said, "How do you feel about becoming American?" And they're all like, "No, no, thanks.
Yeah, we're fine, thanks."
Yeah.
So I don't know whether that's just a thought bubble or in terms of that.
He seems to be pressing the button a bit. It's just unnecessary, I think.
Well, yeah, to be quite honest, it is, and it's Canadians and the Americans are like brothers and sisters. Why the hell would you antagonise them?
Yeah, what's the
This
point?
is the thing. People are going, Canada, Donald, Canada's our best friend. And you're out there bashing Canada. They're calling Prime Minister Trudeau the Canadian governor, as in he's the governor of the state. Yeah. I mean,
Reminds me of Germany and Poland back in the 30s.
Back in the day. Righto. And there we go. US households got a biggest allocation. Righto. What's next? We know that.
We haven't talked about that before.
I'm not going to bore people endlessly with market overvalued.
I think you've already done that, 70 episodes.
That's all right. I've been dining off that for a couple of years.
Bonus section. So what have we got? The finance Exhibit 1. So for those driving that can't listen, percentage of large cap domestic equity funds underperforming the S&P. What's this telling us?
This is what I was saying last week, right?
Oh, remember 92% of fund managers underperforming.
Was that last week? Yeah, last week we said 90% of fund managers said the US market's overvalued, right? And all I'm just pointing out here, because I'm an annoying little bastard, is pointing out that most of them are absolute failures.
Yeah, so 92% of fund managers
underperform over 20 years.
Yeah.
Right? So in other words, buy the index, shut up, go on a holiday.
Yeah.
Right? Don't give it to anybody.
But people still go and find fund managers. It's just outrageous.
Well, yeah, for some people it is easier to do it like that. But all I'm doing is saying, if you went to a mechanic and he failed 92% of the time, or you went to the dentist and he failed
pulled the wrong tooth out
92% of the time, you'd be going, I'm not going back to these blokes.
Yeah.
Right? So
let's just read this. Over a 3-year period, 85% underperformed the S&P 500. Over a 15-year period, 90% underperformed. And over a 20-year period, 92% underperformed. And
it's that in any language would be a catastrophic failure.
We've just been through a massive bull cycle. How can you...
Yeah.
How can you underperform?
Yep. Well, because they pick stocks.
Yeah, true.
Right? They pick stocks.
Yeah, and they missed out on the Teslas and the Amazons and the Netflixes.
Yep.
Of the world.
Well, in this case, a lot of them are in it. Hence the reason why they're so overvalued. Right? But because remember, that's over 20 years. Right? So they'll do great for 5 years and then they'll just be miserable for the next 15.
And then it reverts back to the mean. Yeah, okay.
All right.
Efficient market hypothesis, is that what this is?
Yeah, I put this up here. It's a bit of a long read, so you'll have to look at it in the document, folks. But all I'm doing is talking about when you're in markets, you have to have an edge, right? It's like Buffett said with poker. If you go to the table and you can't figure out who the patsy is, you're the patsy, right? And so what I'm saying to people is here, you've got to basically have an edge in the market. If you don't, you probably won't do that well. Now, as I think I've said before, you can have something like CAPE ratio is your edge. When it's really high, I sell. When it's really low, I buy. And in between, I rebalance, right? You can have asset allocation as an edge, right? I really know how much money to put in places when it's cheap or expensive. I can have a rebalancing strategy that is my edge. I know that if you rebalance more, you'll make more money. Okay, well, I'll rebalance more. Right? So there's a whole raft of them. But what I'm simply saying is that you've got to have an edge.
You got to find it. You got to spend some time understanding what that is. 'Cause
Yes.
it's different for people depending on their personality.
Yes, and that's another thing. If you go, I'm an idiot in bull markets, it's like, okay, well, try and find a way out not to be an idiot in a bull market.
Yeah.
Right? So again, you've got to do these things where you've got to develop a skill or a knowledge that says to you, I'm better than the average and I know how to deploy it.
Yeah, I mean, for me, I need a set of clear rules to look at and basically a tick box.
Yes.
Because I know that I second guess myself. I'm like, maybe
Yeah.
I'll put a bit more in there.
Yep.
And then that's when I end up losing, and that's been the case for 10 or 12 years.
Yeah.
So now I've literally got a tick box. Like when I'm investing in something, it's yep. If it's one less, then I leave it alone.
Yep. Systematic investing, that's the thing. Meb Faber said, the greatest failure of most investors is they don't have a plan, right? And I read that as they don't have a systematic way to invest. And again, that's really relevant at the moment because most people are saying to us when the market's falling and stuff, where do I put my money? And one of the arguments is to say to people, well, what does your system say?
Yeah.
And if it says don't be in the market, don't be in the market.
Go play some golf.
Right? Yeah, stop trying to beat the market every week. It's not going to happen like that. Yeah. That in itself, that self-knowledge is knowing that's the edge, right? Lots of traders are really good at that stuff, right? 200-day moving average, right? The markets have fallen through the 200-day moving average. Okay, ding, 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 I'm out, right? Or saying, right, I'm going to... I've done really well. Oh, it's terrible, but I got to sell.
Yeah, I'll change your asset allocation to 80, 20, 20, 80, whatever.
Yes, yeah, absolutely.
Right. Well, I think that's it. If anyone wants a strategy or to learn about a strategy, that's what we do for a living. So reach out. Other than that, we'll see you guys next week. Thanks, Steve.
Cheers, mate. See you, folks.
As always, remember, we don't provide financial advice.